Bajaj Finance surges despite a dip in asset quality as the management indicates that credit costs have peaked. The lender has also increased credit cost guidance for FY25 from sub 2% levels to 2.05%.
Varun Beverages trades higher. Brokerage Jefferies and HSBC issue bullish calls on the stock. Jefferies has raised its target price to 750 rupees from 720 rupees earlier. HSBC has set its target price at 770 rupees per share.
Gujarat Fluorochem also is higher as the subsidiary GFCL raises about 1,000 crores at a valuation of 25,000 crore rupees. The stock trades lower on account of the fact that the management tells CNBC-TV18 they'll be targeting 7% of the global EV battery chemical market, which is currently valued at $40 billion.
Paytm rallies after the NPCI allows the company to onboard new UPI users. Remember, the RBI had barred Paytm from onboarding new users about 9 months ago.
Persistent Systems rallies as the second quarter revenue and margin beats estimates. The management will be joining us later on the show to discuss their second quarter numbers.
Hello and welcome to Chartbusters. I'm Nigel, with me is Mangalam, and to the top of the screen you'll see there's more green today. So that's good news. It's been a volatile first hour of trade, but at least as we speak, well, the bulls are hanging in there. And what's particularly heartening is the breadth of the market. You have 3 stocks that are advancing for 1 stock that's declining. Good to see, Mangalam.
Good to see, and let's see whether this holds or not. Because of the volatility that we've seen in the last 2 trading sessions, the mid-cap index would be a fairly heartening fact, given it's lost about 5% in the last 2 trading sessions itself. Though, still not out of the woods, but definitely some green is good on the screen. Where do we go from here? Good time to get in Soni Patnaik of JM Financial Services to give us her view on the market. Soni, we've been taking a beating, especially on the broader market front over the last few trading sessions. Do you think in the very near term there could be a bit of a bounce from oversold levels? And if yes, then would you use that bounce to sell more, or perhaps think that it could be building on to some gains from here?
Hi, good morning, Nigel. Mangalam. Thank you for having me on your show. I think definitely because Nifty is quite oversold now, there could be a bounce back of about 150 odd points. Anywhere from current levels of 24,500 to 24,700 could be the range where one can see. Significant call writers, I think that's the level one can actually again look for a sell, because that is the level. If it does not cross, there could be more selling pressure from those higher levels. From current level, one may capitalize on a very small bounce back of keeping a stop loss of 24,450 on the intraday basis point, and we can see it heading towards making a recovery of about 100 points. I think what's crucial over here would be to watch Bank Nifty, which has still not broken below 51,000 support, neither yesterday nor today. So I think that's the level to watch out for. Bank Nifty, still holding on quite strongly. There's a possibility that as long as it holds above the 51,000 mark, it may remain sideways towards 52,000. One can see, there could be some selling pressure, but as of now, there can be a good bounce back of 400, 500 points in Bank Nifty. It's wise to remain cautious and keep your positions hedged when it comes to indices. And I think, one can adopt the stock specific strategy as well from current levels.
Okay, all right, stock specific. So let's get straight to the stocks then.
Right. So, Nigel, that would be a balanced approach for today. One buy idea and a sell idea. The buy idea is in MCX, which has seen very strong bullish engulfing candle pattern today on daily charts, as well as fresh longs adding in the stock. So one can buy in MCX on any small declines up to 6,600. Keep a stop loss of 6,400 and a target of 6,850 to 6,900 can be seen. The sell idea comes in the consumer space, Godrej Consumer, which has seen breaking below its 200 EMA. So I think Godrej Consumer in futures remains a sell with a stop loss of 1,315 and a target of 1,270 to 1,250 can be seen.
All right, take that point. Thank you so much, Soni, for joining in. Meanwhile, let's move on and let's get you some market opinion coming in. With markets being volatile, lacking direction, record FII selling of the Indian equities, what lies ahead for the market? Madiha caught up with veteran investor Madhu Kela, asked about the current correction in the Indian market, the reasons behind the heavy FII selling seen in the Indian market of late.
We have had a tremendous bull run in the last 3-4 years. A lot of small cap, mid cap indices have compounded at 40-45% in the last 4 years. So this correction actually was, I would say, much needed, and it is right that it is coming. So in the long run, I am still very bullish on the India story. I feel from a long-term perspective, a lot of sectors and companies will still have really good growth. But if you are investing at this point of time, you have to be extremely careful. I repeat, extremely careful, because there is a lot of kite flying which is going in the market. All kinds of stories are going around. A lot of novice investors have come who are experiencing the market for the first time, and they have not seen downfalls. They have not seen how cheap shares can become. So you have to be extremely careful. And second, your return expectation have to be very moderate. If you make like between 12 to 15% return over the next 3-4 years, that will be a good achievement. Return of capital is very important than return on capital at this point of time.
All right. You advising investors to be cautious. Foreign investors have been selling Indian equities, $10 billion in October. What is your take on that?
So the foreigners have been selling because preliminary, there has been a lot of outflows from emerging market, and India's weightage had gone up. So there is some revival in China, where the China's weightage had gone down significantly, and people have become overweight in India. So I think there is some tactical shift which is happening from India to China, because Chinese equities are definitely cheap, much cheaper than Indian counterpart. So that is one. Second, people have made a lot of money in India in the last 3-4 years. They are finding an opportunity to book profit, because they are not passionate about the country. They are only passionate about the money which they are making, and rightly so, they are booking profit. Thirdly, I would say, a lot of new companies are coming. So some amount of money is also getting recycled. So all of these selling numbers which you see, let's say a lot of foreigners would have put money in Hyundai IPO, but that has not come anywhere in terms of disclosure. Right? So some amount of recycling is also going up. So a combination of expensive valuation, other markets being more cheap, people making absolute amount of money, December is coming, people want to take out their bonuses, etc., etc. So combination of all this is what is... but I don't think this selling will continue for a long time, because India has a standout opportunity, and people will find, people who have been investing in India, even the foreigners, have tasted the blood. I don't think this pace of selling should continue in the November or December month.
Insightful opinion coming in from market veteran Madhu Kela. Meanwhile, let's get you an idea for profit coming in from our colleagues at Money Control Pro as well. Nitin Agarwal joins in with a stock that he's been tracking closely.
The company that I have chosen for today is Landmark Cars, which is a premium auto retailer. There are a couple of factors that make us upbeat about the company. First, the significant headroom to grow. India, being the third largest economy, has a very low penetration of around 1% in the premium car segment as compared to economies such as UK and US. Further, the preference for premium vehicle gives significant headroom for the company to grow. In addition to, the company has a strong portfolio of premium OEMs, which include Mercedes-Benz, Volkswagen, Jeep, etc. In addition to that, the company has gotten contract recently with BYD, MG Motors, Kia, and Mahindra to sell their premium portfolio. Apart from that, the OEMs that it has partnered with has a slew of a strong pipeline of the new product launches, which are to be expected in next 12 to 18 months, and hence this provides a growth opportunity for companies such as Landmark. In addition to that, the company has been focusing aggressively on after-sales segment, which not only provides a steady stream of revenue, but also provides a strong EBITDA margin for the company. And lastly, the company is currently trading at around 18.4 times FY26 projected earnings, which we believe is very reasonable for a company like Landmark Cars, and given the growth opportunity and the tailwinds that it is expected to have going forward.
Right, leaving you with some good news as we slip into a short break. A million Indians are now making smarter investment decisions with the help of Money Control Pro. Money Control Pro, which is part of the listed entity Network 18, has now crossed the milestone of 1 million paying subscribers. The site closed September at over 53 million unique visitors, nearly 30% higher than its closest competitor, ET, underlying the fact that Money Control Pro is India's platform of choice when it comes to making financial decisions. If you haven't subscribed yet, scan the barcode that is visible on your screen to become a part of the Money Control Pro family. Help yourself make better financial decisions.
Money Control also celebrated the 1 million subscriber landmark this morning by ringing the opening bell at the National Stock Exchange. The editorial team of Money Control Pro was also joined by India's leading investors, market minds, and movers and shakers, including Ashish Chavan, the MD and CEO of the NSE, Samir Arora of Helios, and Edelweiss Rashesh Shah, for a special chat on the power of Indian equities. Time to slip into a short break. Though we come back, we'll get the management of Persistent Systems who will detail the past quarter's numbers. Stay tuned. Welcome back. Well, the markets are holding with gains. The problem is the Nifty Bank, actually. That's actually underperforming today. It's now moved into the red. So I guess a couple of these banking names have come in for some profit taking. So let's pull up Axis Bank. Axis Bank actually has been doing quite well of late, but that's come in for profit taking. The other big boy is ICICI Bank. That one as well is a little bit lower, Manglam, in the last few minutes, which explains when both those two banks move into the red. That's the reason the Nifty Bank as well is now down close to 50 points.
Absolutely, take that point, and in the broader markets as well, a couple of these PSUs, the PSU index has been quite an underperformer of late. BHEL is the one, there was a large trade on that counter as well, just when we started the show, where about crore shares changed hands on the exchanges. That stock's moved to the low point of trade, and we're seeing some traction on the downside for some of these other banks as well. Case in point, something like a Federal Bank and City Union Bank. So no problems for a bunch of these, IT stocks. We have Coforge, which is up around 11.5% on the back of good numbers coming in from Persistent Systems as well. That stock moves to the high point of trade. And speaking on Persistent Systems itself, the stock up nearly in double digits, almost 11%, after having seen a big move already, very close to its 52-week high for that stock as well. Went into the numbers with a cut of almost 10% from its 52-week high. Currently, as we speak, with today's up move, it's gone back up to that 52-week high. We have the management with us on the show. Sandeep Kalra, who's the CEO, joins in to discuss the quarter gone by. Thanks a lot, Sandeep, for joining in. You've achieved 5% revenue growth in the first quarter and the second quarter. Now, the obvious question, the visibility for the second half of this year, what do you have on?
So let me first summarize the result for the quarter. For the quarter, we saw 5.3% in dollar terms, quarter on quarter, which translates into 18.4% year-on-year growth and a revenue of $345 million. In rupee terms, this translates into 5.8% quarter on quarter and 20% year-on-year. And as you rightly said, this is on the back of 5.6% dollar term growth last quarter. Now, if you look at our pipeline, we have announced significant amount of deal wins. So that should bode well for us as far as the H2 is concerned. We don't give forward-looking numbers, so I'll not be able to quantify that in dollar terms and so on. But if you look at our overall annual contract value and total contract value that we have booked in the last several quarters, that should bode well for us.
But do you think that the second half of the year can be better of the second half of the year last year when you clocked around 3.5% of revenue growth?
As far as the pipeline is concerned, as far as the order book is concerned, it points in that direction, but we'll let the time flow by. Otherwise, it's again like giving forward-looking, kind of numbers. As you've seen, we have grown 18 sequential quarters. We have outperformed the industry. We have invested in AI-led technologies, the platforms that we have built for both product companies and for IT side of the house, and we are relatively confident of outperformance from the sector perspective.
That's good. Confident of outperformance from a sector standpoint. But can you explain what's happening on the margin front? I mean, there is a reversal of contingent consideration payable on acquisitions. How much has this boosted margins by in the first half? And what happens to the margins in the second half? And also FY26?
Sure. So let me take a little time to explain this to you, because I think this is a question that has been brought by you last quarter as well. So look, when you do acquisitions, anyone who has done acquisitions understands that, not 100% of your acquisitions pan out 100% times the way you think they should, or the basic hypothesis for that. Some of the acquisitions do extremely well, and some of the acquisitions don't do well. When acquisitions don't do well, it is contingent upon the company to still perform the way they had planned to perform, and you need to invest in building capabilities around your sales and marketing and so on. In addition to that, if you look at the last 2 years, the technology services market, or even the technology market, is being disrupted by what many people call generative AI. I would call AI at large. And we have been doing significant investments in that as well. Now, if you look at the reversals that happen for acquisitions, if the acquisition doesn't perform, the payouts don't happen for the earnouts that are there. That is deployed by Persistent in our sales and marketing capabilities, in our other technology-led capabilities, and we still have delivered. If you look at the last several years, last 4 years for Persistent has been 12.9%, 35%, 35%, 14.5% year-on-year growth, which has relatively on a CAGR basis for last 4 years outperformed the industry by 16%, the compounded annual growth rate for Persistent being 24% for the last 4 years. So if one has to look at a holistic picture, holistically, Persistent has delivered with acquisitions, doing very well, and some of them not doing very well, investing in the right places to deliver the overall growth. So we are very confident that the trend will continue in terms of our growth and margin trajectory. We had said we want to be at the same margins aspirationally as the last year, and we'll deliver to that. We are on that path. We'll see how it pans out. In the years to come, with the optimizations that we have done, our margin should improve. We have said very clearly, our aspiration is 200 to 300 basis point improvement on the margin front over the next 2 to 3 years, and we stand by that. Hopefully that answers you.
Yeah, absolutely. We noted that point on the margins. Now, the street is expecting a pickup in spends due to interest rates cuts. Is that likely? What are clients telling you for 2025? Will they see a pickup in budgets?
We are listening to the customers in terms of their apprehensions about the elections, apprehensions about the Middle East, where things could go wrong. At the same time, the interest cuts are, obviously a good thing, good news for many people who are leveraged. Otherwise, also people who want to invest, the cost of capital goes down. We'll let the things pan out. Overall, too early to call. Green shoots are there, but we'll let the next 2-3 quarters pan out because a lot of these things are very dynamic in nature.
Right. I'm sorry, I'll just comment on that once again. You said you're expecting green shoots, but when?
Green shoots, if you look at our BFSI as well, our BFSI grew. Healthcare life sciences has been good for us. Technology segment, we are saying, at least for Persistent, will start, turning green. And look, I will also say this. A lot of people talk about stress testing of banks and so on and so forth. It's not the environment people are testing. It's the bank that the people are testing. Similarly, a company's performance is dependent on the macro and other things to a good extent. But how a company like Persistent behaves, whether it is COVID, post-COVID, bad economy, good economy, we have proven for last 18 quarters of sequential growth, we can handle different kind of economic conditions, macro conditions. We know how to figure out the revenue pools and profit pools, connect the dots and deliver a good return for our customers, investors, partners put together. So irrespective of that, we are confident we are on a good trajectory and we'll give it our best.
Appreciate you joining in, sir. Thanks a lot for giving us all that commentary. For the time being, the street has taken heart from that commentary that's come in, and the stock has moved to the high point of the day. Now we're up close to around 11.5%. So clearly, the street has listened in to what the management had to tell us. Well, time to slip in a short break. You come back, we'll continue to focus on markets and stock-specific action. Welcome back. Let's focus on a couple of stocks that are moving around. Varun Beverages came out with its set of numbers yesterday. Mangalam, how are the numbers and what's the read-through?
Well, the numbers were very good, Nigel, yesterday. And they were good in the sense, the context, because everyone in the beverage space was worried about, weak out-of-home consumption. At the same time, there was some competition, etc. as well. But despite that, Varun Beverages, India volumes grew by 5.7%. Yes, they were below what majority on the street were expecting. But then again, given the context, it was a lot better than what was feared as well. And as a result of which, we have brokerage notes that have come too. In the midst of muted consumption trends and unfavorable weather, Varun Beverages' 6% India volume growth appears reasonable. That's not all. In fact, it was better with the recent forays in South Africa and Congo for the international business as well. And the company, with growth, they've also shown margin expansion. Add to that, they've announced a QIP of almost 7,500 crores as well, which will help them repay debt, pursue some M&A and add capacities, basically strengthen their space in the marketplace itself. And on the Campa Cola, pricing itself, there were questions in the conference call. The management said they're unfazed on price cuts coming in from Reliance's Campa, even though it is a formidable competitor. So we have Jeffries, which have raised the target price from 720 to 750 odd rupees, implying a 30% upside. And we have HSBC as well, which has a buy call and a target price of 770. So yes, there is some challenge in the beverage space. But despite that, Varun Beverages stands out and does better.
Indeed. Quite a few stocks, actually, Mangalam, from the broader markets are moving around. You pull up Godfrey Phillips as well. Suddenly, that stock has moved to the high point of the day. Solid move is what we are seeing out there. Torrent Power, that's the other stock that's moved, and it's moved. Actually, these stocks have moved in the last 30 minutes or so. So just want to pull out some of them. And Emphasis, the numbers, the day of numbers were pretty much okay. There was no big negative surprise, but the stock ran away. Now, as we speak, the stock is up 5.5%. And I think the mid-cap IT space, that's the sector to watch for today's session as well. But I think on that note, we'll wrap up on this edition of Chartbusters. You stay with us, though. Trading Hour comes up next.